Hey guys, what's going on? Jeb here, and in today's video, we have some important technical analysis to do because, as you guys probably know already, over the last couple of hours, Bitcoin has, in fact, rejected at $11,000. Now, this actually makes a little bit of sense if you look at the daily TD sequential on the Bitcoin chart, because as you'll see, over the last couple of days, the TD sequential did hit a 9 flash, and it has not, in fact, reset yet. I can speak English. Anyway, we need to do some technical analysis on the Bitcoin chart to see when that TD sequential is going to reset, and we're going to be talking about why this little pullback on the daily chart may actually be a good bullish thing for Bitcoin. And in fact, guys, that's not the only thing we're going to be talking about today, because we also need to get into some fundamentals having to do with the Bank of England proposing and commenting about negative interest rates. If you don't know what that entails, that means that you would have to pay the bank interest to keep your money in the bank. Yeah. Talk about the greatest ad for Bitcoin this entire year. We're going to be discussing all of that and more in today's video, guys. I think you're going to get a lot of great value out of today's video. If you do, as always, consider hitting that like button or hitting the dislike button twice. I know I've made that joke a lot of times, but it amuses me. Anyway, guys, without much further ado, let's go ahead and dive right on into it. Something I want to talk about really quickly is something that actually means a whole lot to me. So if you want to get straight to the analysis, just skip forward about a minute. This won't take that long, but it's something that I want to address here at the beginning of the video because it actually is pretty important to me. I want to read a comment really quickly. There was someone in the comments yesterday who made a mention of something that actually means quite a lot to me, and their name is I Hate Toy Story 4. Great name, by the way. They said, dude, you're talking about getting a house. You're talking about wearing formal clothing. I feel like you're bragging too much and losing your humbleness. Humility? Humbleness? Which one's right? I don't know. Bragging and losing humbleness is not good. If you buy expensive new stuff, you should keep it to yourself because it's bragging to tell everyone about it. It's okay to buy new stuff, but you shouldn't be telling everyone. I hope you will think about my words. And the reason I bring this up in the middle of a technical analysis video, and by the way, we're going to get to some very awesome stuff, so like I said, bear with me here. I take that comment very seriously because at first I read that, I'm like, what are you talking about? I'm not bragging. I'm not trying to. But they're actually right. So I want to apologize for over the last couple of months, really. I feel like I have been almost subconsciously bragging about certain things. And I really don't intend to be that way. I want to be as humble as I possibly can. And it's weird to say I want to be humble because it's like you're saying you want it. It's almost counterintuitive. But, you know, anyway. I just want to apologize because I really did not, I was not trying to portray that at all. You guys got to realize I'm 20 years old and I grew up broke, and all the things that have been happening over the last 6 or 12 months are really exciting to me, and I like sharing them with people, but that's not bragging, at least the way that I see it, but I can see how it would come off that way, and I really hope you guys understand that's not what I'm trying to do. I don't ever want to be one of those people that does well for themselves and then flaunts it. That's not who I am, and I will take that into consideration. Thank you so much for leaving that comment. But anyway, let's go ahead and jump onto the chart. And by the way, before we get started, I know a lot of you guys might actually disagree with the comment that we just read, but don't say anything because their intention is right, and I really appreciate that feedback. So don't hate on them in the comment section down below. Guys, the last several days on Bitcoin have been very tumultuous. In fact, we've finally seen some volatility returning to Bitcoin and the cryptocurrency markets, and that is a very good thing because this period right here, I don't know about you, I found it pretty boring. There was not a lot going on. Luckily, we did see Bitcoin rally, break through the 20 EMA, and test the $11,000 level of resistance. And unfortunately, that theory that we had about Bitcoin entering some kind of pennant right here and holding the 20 EMA is obviously flawed because Bitcoin pulled back all the way down to around $10,500. But guys, I would pose to you that this is actually not a bad thing on Bitcoin. We have fallen below the 20 daily EMA, and that does mean that we've pulled out of an uptrend on the short term. But the reason I say this is not actually a bad thing for Bitcoin is partially due to the fundamentals, which we'll be discussing here in a little bit, but it's also because it gives Bitcoin's RSI and MACD even more time to reset. As you can see on the daily chart, the MACD is starting to converge on itself, which doesn't seem like a good thing at first, but understand, Bitcoin is still above $10,500, that all-important support level that Bitcoin has been trading above and around for quite some time. In fact, if I show you on a clean chart, you will understand just how important this level of $10,500 is. As you can see, we had kind of a zone test on it back over here, all kinds of tests on it over there, and now Bitcoin is pulling back and testing it perfectly, as we can see right here. So what does this mean for Bitcoin? Well, it means that Bitcoin is still above massive support levels, is trading sideways, having small pullbacks, and what that means is that we are building a foundation above 10K, and that means that in the future, we can expect to see rallies starting at $10,000 and going up from there, not starting at $4, $5, $6, $7, $8,000, starting at $10,000, $11,000, maybe in the future $12,000, $13,000, and moving from there. We're building a strong foundation by trading sideways and having all this volatility around here. Not only are we building VPVR support, which I'll show you right now, as you can see, there is an absolute ton of it, especially over the last couple of years, in the $10,000 range. As we talked about earlier, we are also having the RSI and the MACD reset in a very, very healthy way. RSI is pulling back to 45 when we're already trading at $10,600, and MACD is having healthy consolidation. Not a bad thing at all in my books. In fact, Bitcoin, unless it were to pull back below like $9,700, I'll show you where I pulled that number from here in just a second. I don't think that's a very bad thing for Bitcoin in the slightest. I think it's actually a very healthy thing for Bitcoin because it allows us to lock in gains above 10K. The longer we lock in gains, the better the foundation we build and the bigger the next rally will be. And we'll get to why that rally might be absolutely huge in just a second. But guys, before we get into why this might actually be such a good thing for Bitcoin, I want to talk about one thing that I missed in my technical analysis. I've been very busy, no excuses whatsoever, but it is completely my fault that I missed this, and that would be the 9 flash on the TD sequential that happened back on the 17th of September. As you guys can see, we had a green 9 flash, a red 9 flash, which did indicate some kind of pullback. I was talking about Bitcoin rallying above 11K, and because of that 9 flash, it was unlikely that it was going to do that. My sincerest apologies. We're working very hard to make sure that we are doing better than that. Nevertheless, now that we've caught it, we understand why Bitcoin did not break above 11K. We've pulled back to 10.5. So the 9 flash on the TD sequential does explain a lot of that. But guys, at the end of the day, the takeaway from RTA is that Bitcoin is still above. Let me clean up this chart a little bit. Bitcoin is still above $10,500, our very important level of support. We are still above our long-term downtrending level of resistance, which is now our long-term downtrending level of support because we have managed to break it. And those two come together to make a zone of support, which Bitcoin confidently bounced in, which ends, you guessed it, right at around $9,700 to $9,800, falling lower as we go. All of this to say that even if Bitcoin goes into a short-term pullback, pulls back down to just around 10K or even a bit lower, we are still in good territory because if Bitcoin were to pull back down to $10,000, RSI would be sitting around 30. Fear and Greed Index, which has started to rally back to neutral right now, would be over feared. It'd be too far in the fear direction, and investors would come in and scoop up Bitcoin at 10K. Needless to say, we are building a strong foundation, but now let's jump into the fundamentals and discuss why the future of Bitcoin rallies might be very, very large after we are out of this consolidation phase that we've been in for the last couple of months. And one of the first things that we need to discuss on the Bitcoin fundamentals is none other than the Bitcoin hash rate. You guys may have guessed what it was. I've given you a little bit of a pause. Maybe you thought it was backed. Maybe you thought it was something else. It's the hash rate. Come on, guys. It's one of the most important fundamental indicators in Bitcoin's entire ecosystem. And holy cow, do we have some news on it. As you guys can see, the month of September has been absolutely ludicrous for the hash rate on Bitcoin. We're looking at the last year of hash rate price action. As we can see, about a year ago, Bitcoin's hash rate was sitting around 90 exahash, and now in September, it has absolutely moonshotted from around 120 all the way up to a peak of 143 exahash. That's 143 million terahash. If we look at a 30-day rolling average, we can see that ever since mid-June, Bitcoin's hash rate has been increasing exponentially. I mean, even looking at the log scale, we can see just how fast it's been going up. So guys, you might be wondering, because we don't talk about hash rate very much on Bitcoin, why is this such a big deal? Well, you have to remember, we've just had a halving event in Bitcoin, and what that means is that the Bitcoin block reward just dropped from 12.5 blocks per Bitcoin mined per block down to 6.25 Bitcoin per block mined. So what that means is that to be profitable in mining, a lot of you guys that are miners out there could tell us in the comment section down below, you need to have a lot more hash rate to break even. And what that means is that more and more and more and more miners are coming online, which means that there's more security on the network, which means in theory the network is more decentralized, and overall it is one of the most important fundamentals in Bitcoin, and the fact that it is going up this fast indicates that eventually price action is going to continue with it. And in fact, it has been doing that if you take a look at the chart. Let's look at this. June 10th to right now. What did the chart do? This is what the chart did on the log scale on hash rate. It rallied about 24%, and ever since June 10th, Bitcoin has rallied by about 16%. At Bitcoin's height, it's rallied 40% from where it started. So yeah, hash rate is going up by quite a bit, and Bitcoin's chart is following it, and that makes a lot of sense. That's why when you look at the history of Bitcoin, you notice the bottoms for Bitcoin keep getting higher and higher and higher. Like here, 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 there, 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 there. You see what I'm talking about? Every time the bottom keeps getting higher and higher and higher and higher and higher. And that is following, in part, the Bitcoin hash rate continuing to go up. It's a very important fundamental one that we will be talking about more as time goes on. But I want you guys to know that we just passed 140 exahash, which compared to what it looked like when I was in the market, let me give you some perspective from when I got into the space 3 years ago. I got into the market July 31st, 2017. If we look at July 31st, August the 1st looks like it's going to be the closest that we can get. Let's see if my mouse, yeah, 6 exahash. We're at 140 million now, with only one halving event in that time. I've only been here long enough for one halving event. One happened about a year or so before I got here. So guys, this is big news. Anyway, let's go ahead and move on to the Bank of England. We will talk about this hash rate more in coming videos, but this right here is what I've been wanting to talk about all video because the European banking system has been toying with this idea for quite some time, and it looks like something like this may actually end up coming to fruition. We're going to more than likely be doing an entire dedicated documentary-style video on this in the next couple of months, so subscribe for that if you haven't already. This is a very, very important and interesting thought process. As you guys know, when the thing that we're all dealing with right now that I'm not allowed to say because YouTube will demonetize me. When the thing started, the Fed almost immediately dropped American interest rates down from 4%, around 3% down immediately to 0. The Fed does not want to drop them into negative interest rates, but apparently the Bank of England is talking about it. So let's go ahead and jump on to this article. Excuse me, it's an article. It's not a chart. Bank of England talks negative interest rates in best ad for Bitcoin. As Bloomberg reported, quoting minutes of a meeting held Thursday, the Bank of England, the BOE, has become the largest central bank to discuss negative interest rates. We'll discuss what that means later. According to the results of the meeting, the BOE will enter discussions with banking regulators over negative interest rates, which effectively means lending institutions and hence savers must pay to store cash. The reason is the impact of coronavirus lockdown on the economy, along with the looming presence of Brexit, deal or no deal. So guys, if you want, I'll let you go find this article on your own and read it from Cointelegraph. I don't want to just rip all of our content straight from Cointelegraph. Great news article, news site. Go follow them. But the thing that I'm really interested in is the fact that, as they said, negative interest rates would mean that storing money in a bank account would cost you money, because you better believe the bank is not going to take that fee. They're going to offload it on the person that has their money in the account. Let's say you have $100,000 in an account, call it a savings account, and you had $100,000 in there and you're getting 1% interest the year before. Well, before all of this started, you would have made $1,000 a year in interest. Now, if you want to have $100,000 in a bank account that has, let's say, negative 1% interest rates, you're going to have to pay $1,000 a year to have that money there. So not only are you paying money on your principal to keep money simply in a bank account, you are also having to deal with the inflation that is going to come about because of this economic turmoil that we are in. Horrible thing for fiat currencies, great thing for Bitcoin. As we talked about earlier, Bitcoin has a tried and true strong history of marching higher and higher and higher, and because of that, people will look to Bitcoin to store their money as a hedge against the dollar or the euro or the pound, major currencies that we never thought would go through something like this. I am not crying doomsday. I'm not saying the pound. I'm not saying the euro or the dollar is about to collapse. I'm not one of those people that thinks all fiat currencies are going to be boom, bust, bang, dead in the next 10 years, because that doesn't make a whole lot of sense to me, to be quite honest. That seems like fear-mongering, and it seems like clickbait. But however, that doesn't mean that they're going to be doing as well in 10 years as they are right now, especially after all of the money that has been printed in response to this crisis. Now, many of you out there who study this will mention the fact that we are going through actually deflation right now as a response to economic forces that I'm not going to get into in today's video. That much is true. But in the future, the amount of money that the United States has printed, as well as the debt that we've taken on, is going to bite us, and we are going to have to deal with that in some way, shape, or form. And in doing so, it will likely drive people to something they consider a hedge, gold, or Bitcoin. By the way, even though the stock market is tumbling right now, Bitcoin's pulling back, gold is doing pretty well. The stock market has pulled back 10% in 19 days, which is ridiculous amounts of volatility for the S&P, for the SPY. Meanwhile, gold, even though it has pulled back, is more or less trading sideways in those same 19 days. Guys, one last thing to leave you with is you have to remember the stock market is not inherently attached to the economy. The stock market is attached to companies, and the stock market being based on market capitalization weighted means that a bunch of the small, the Fortune 400 to 500 companies in some of these big stock indices. They might not be doing very well, but you've got Apple, Google, the FANG stocks, all of these different stocks doing very well because they're sitting on, like Apple, for example, $250 billion of capital. By the way, go look up Apple in Ireland. Ireland had to recalculate the way they do GDP because Apple had so much cash sitting in Ireland that it was skewing their gross domestic product numbers. They don't use GDP anymore. Go look that up. That's really interesting. We might do a video on that in the future. A lot of these big companies are doing very well because they had a lot of cash on the sidelines. Airlines are getting a lot of bailouts, which maybe they should, maybe they shouldn't. We're not getting into that. But the point is, a lot of these big companies are propping up the stock market when the little guy is actually getting wrecked right now, especially the people that run brick and mortar stores, the retailers, the restaurants, the cruise line industry, the hospitality industry, the travel industry. All of these industries are getting annihilated, but it's not reflecting in the stock market. So don't be fooled because the stock market just hit all-time high. Do not let that fool you into thinking that the economy is healthy right now because it most certainly is not. Anyway, guys, we're going to talk about all of that and more in coming videos. If you did enjoy today's video, consider hitting that like and subscribe button. It really helps out the channel when you do that. We are trying to get to 75K subs by the end of the year, 100K by Valentine's Day. If you'd like to help us with that and be along for a crazy ride that we're on right now, I would ask you humbly to hit that like and subscribe button. Guys, thank you so much for listening to my little spiel earlier on. But at first when I read that comment by I Hate Toy Story 4, which is a funny name, at first when I read that, I was like, what are you talking about? I'm not doing that. And then my ego kind of came up, and I'm like, no, he's wrong. I'm not doing that. And then I realized, wait a minute. Since I had that response, he's right. So, you know, guys, I found, and I'll leave you with this, I found humility is the foundation to everything, because if you don't have humility, it's impossible to learn. It just is. You cannot. These two things are mutually exclusive. Pride and education. You can't do both. If you want to learn, you have to accept the fact that you don't know everything. You have to accept the fact that you're not hot stuff. You have to accept the fact that there are people out there that are better than you, and you need to make sure that you're not flaunting what you have. And I'm lucky enough to have some things now, but that doesn't make me any better of a person than you, and that doesn't make you any less of a person than me, and I hope that I have never that I never will ever make that seem the case, because there are a lot of people that get a little bit of fame, get a little bit of money, and it goes straight to their head, and I don't want that to happen. So guys, if you're a Christian, be praying for me. I really appreciate your support over the last almost 3 years now. But guys, that is going to wrap it out for today's video. Before I go, I do just humbly and as always want to thank each and every single last one of you for watching, and I will see you guys in the next video. Peace.